Hello everyone, welcome back. Today we need to talk about what's happening in the markets because the warning signs are flashing. Bitcoin has been on a sharp decline, macroeconomic indicators are showing a growing risk-off sentiment, and crypto sentiment has cratered. But there's more beneath the surface. We're going to break down Bitcoin's price action, dive into critical economic data, and discuss how shifting sentiment and regulatory changes could shape the future. If you want daily market insights, don't forget to join my free Discord, link in bio. Otherwise, let's get into it. Let's start with the Bitcoin chart. Right now, Bitcoin has broken below the key 85,000 support level and is hovering near 80,000, which is dangerously close to retesting major support at 74,000. Looking at the chart, we can see that we've fallen below the 200 EMA and have actually started closing into areas where we previously haven't. To make matters worse, we rejected off the 100 EMA, which is usually where we want to be above in a bull market. So the technical indicators are suggesting weak momentum, with Bitcoin losing support at the 200 EMA and actually denying the 100 EMA retest. Now it's sitting at 80,000. And historically, this sort of structure signals a major decision point. If Bitcoin fails to reclaim this 200 EMA, then we're looking at further downside before any real recovery can begin. Let's move on to the weekly time frame. As you can see, we have broken through the baseline of the Ichimoku cloud. Now, this is not something that we need to take lightly, as historically speaking, when we do fall below it, we do end up retesting or getting really close to retesting the top of this Ichimoku cloud. As soon as we fall out of the Ichimoku cloud on the weekly chart, it does indicate the beginning of the bear market. So when we break out of it and go above it, this is when the bull market starts, and when we break below it, this is when the bear market starts. So when we revisit the cloud on the weekly time frame, this is extremely significant, as this either marks the beginning of a reversal or the beginning of a bear market. Finally, looking at the daily chart, stochastic and RSI, we can see that again, the market does not look great. We have seen the daily stochastic curve back down, and the RSI is still trending in very bearish levels. Now, again, at these RSI levels, we do see a reversal occur, but looking at the stochastic, what this really tells me is that we do have quite a lot of downside available before we do go back up. So if the stochastic wants to extend all the way back down again, we could see a potential break of the previous high, maybe even go as low as the 68,000s. That's a prediction to make once we get closer to the targets that we have. But right now, my main target is 74,000. And if you guys want daily updates so you know whether Bitcoin's reversing at 74 or 68, or if I think it's going to go lower, be sure to join the free Discord, link in bio. Check that out. Now let's talk about the broader economic conditions because this is where things get serious. The US dollar is weakening, and usually this is bullish for Bitcoin, but in this case, it's falling due to uncertainty surrounding Trump's tariff policies and their long-term impact. So the US dollar actually reflects a drop in consumer confidence in the US economy. This is further evident because the job market is still pretty solid, but there are warning signs ahead. The job market is showing cracks. Recent employment data fell short of expectations, signaling potential trouble for economic growth. The latest jobs report showed steady payroll growth, but underlying cracks are forming. Hiring has slowed down in manufacturing, retail, and technology, indicating reduced demand in key sectors. Wage growth is also failing to keep up with inflation, further eroding consumer purchasing power. This is critical because the Federal Reserve has emphasized the need to see a weakening labor market before considering rate cuts. So far, job numbers have remained resilient enough to delay any immediate easing. If layoffs and hiring freezes accelerate, this could increase the likelihood of rate cuts, but for now, the Fed remains cautious. The risk here is that if inflation stays elevated while the labor market weakens, we could enter a stagflationary environment, complicating the Fed's decision-making process and keeping risk assets under pressure. Furthermore, stagflation risks are emerging. We are now in a scenario where economic growth is slowing while inflation remains sticky. This is a dangerous combination that could force the Fed to maintain higher rates for longer, preventing risk assets like Bitcoin and your cryptocurrencies from recovering. US consumer confidence dropped sharply in February by about 7 points. For the first time since June of 2024, the expectation index was below the threshold of 80 that usually signals a recession ahead. As quoted by Stephanie Gichard, in February, consumer confidence registered the largest monthly decline since August of 2021. Since consumer confidence has plummeted to its lowest level in over a year, this suggests growing fears of an economic downturn. The Atlanta Fed's GDP Now model took a steep nosedive in its Q1 growth estimate, showing signs of a weakening economy. The VIX, or the volatility index, is rising, meaning uncertainty and fear are driving investors away from risk assets. Finally, interest rate cut probabilities have shifted significantly, with the Fed now expected to delay cuts as inflation remains sticky. The market is pricing in a rate cut in June of 2025. All of these point to one thing: investors are going risk off. When uncertainty rises, high risk assets like Bitcoin tend to suffer. If this trend continues, Bitcoin could remain under pressure until we see a shift in macroeconomic conditions. Now let's turn to crypto sentiment and news because this plays a huge role in short-term market behavior. The Crypto Fear and Greed Index has collapsed to 17, putting us firmly in the extreme fear zone. Just a month ago, we were at 35. Massive liquidations have shaken the market, with billions wiped out as leveraged traders were forced out of their positions. Liquidations soar 400% as the Fear and Greed Index hit extreme lows. The White House Crypto Summit fell flat. Investors were expecting a major bullish catalyst, but instead, the government announced that they won't be selling their existing crypto holdings, but also won't be buying more. This means no new liquidity is entering the market from institutional or government sources. However, the SEC is quietly reversing its stance on crypto, and all Gensler-era enforcement actions have been dropped so far. Several enforcement actions and investigations into major crypto companies have been put on hold. This could be a major bullish catalyst when consumer confidence returns. Right now, sentiment is at rock bottom, but we need to watch how regulation plays out because it could set the stage for the next bull run. So what should investors be watching for? Here's what needs to happen for Bitcoin and risk assets to flip bullish again. Firstly, the Fear and Greed Index needs to bottom out and start recovering. Historically, these levels have been where smart money accumulates. Second, the US dollar needs to stabilize because a continued decline could be bullish for Bitcoin, but only if investors regain confidence in risk assets. We need clarity on interest rate cuts. If the Fed confirms rate cuts are coming in the next few months, markets will likely react positively. GDP expectations need to recover. The sharp drop in the Atlanta Fed's GDP Now estimate needs to show stabilization. Finally, the SEC needs to take actual action on positive crypto regulation. If we get pro-crypto policies or regulatory clarity, institutions could re-enter the market. Until these shifts happen, expect continued chop, uncertainty, and risk-off behavior.